Hi, this is Shelley Kraft, and welcome to SNNLive. We're at the Cambridge House California Resource Conference 2013 here in Indian Wells, California. I have with me John Burges of Northern Freegold Resources, symbols NFR on the TSX Venture and NFRGF on the OTC. John, welcome back to SNNLive.
Shelley, thanks for having me. So
let's get an update. Tell us what's new and exciting about Northern.
Well, there's been lots of exciting news in the last month or so. In early January, we put out a new resource on our gold deposit, Nucleus, which was an increase in the ounces we have, and also found, more importantly, a subcropping zone of higher grade. And then last week, we put out our very first preliminary economic assessment, PEA, on the property. It was on the Nucleus and the revenue deposits. And, you know, it was a pretty good start. We put together a engineering study with a net present value showing $615 million on a base case with a 23.4% IRR. So, you know, for our first PEA, this is our first go around, we were pretty happy with the results. I think.
So let me ask you, for people who may be new to the business that you're in, put that in layman terms so that people get an understanding of the size of the resource and the mineability of it and the logistics surrounding it and where it's located.
Well, a PEA is effectively the first economic study that a company will typically do to see what the economics prospectively would look like if you turned your project into an actual operating mine. So it's obviously forward-looking. You use various assumptions in terms of physical prices of the metals and the cost of extracting the metals, and you come up with a model that then spits out a net present value and an IRR, and obviously you're looking to have numbers that are attractive for investors. And then typically what happens is once you do your PEA, and if the numbers are decent, which ours were, you then move forward with your project and do further engineering studies, more comprehensive studies that typically would then lead to a pre-feasibility and a feasibility study. To put this into the context of where we are operating, which is in the Yukon, there's probably maybe a handful, six or so companies in the whole of the Yukon that have put out PEAs, you know, in recent years. So you're certainly elevating the company from just we're way beyond the sort of exploration stage. You've now got a project. You've now demonstrated some economic viability with that project, and so you're putting yourselves into a category of a fairly few and select group. And
but also, the Yukon, ladies and gentlemen, what is it known for besides being up there?
The Klondike gold rush over 100 years ago. You know, it's a famous, one of the most famous gold rushes in the world, and there's been gold mining on placer mining activity ever since. In fact, on our property, there's been placer mining activity for decades, and that's how we put it together. We're in an area of the Yukon that's got good road access in. We're just off the main highway. There's an operating copper mine 30 kilometers to the north of us, so there's good logistics with power and roads. So yes, it's in the north, but you've got to choose your spots, and we're in a decent location.
And it's mineable.
And well, we believe it will be. I mean, the PEA has definitely suggested that there's some pretty robust economics, and we also think this is also the first initial assessment, and that we have a lot more mineralized zones that aren't part of the resource calculation that went into this PEA. So as we explore more, drill more, there's a pretty good chance, or certainly potential, to add tons and ounces into our resource, and that would then improve the economics further. So we think this is the first of probably another, in a year or two, we'd like to be able to upgrade that PEA and do more work on it.
And it's mostly gold, eh?
It's roughly two-thirds gold. I think based off the PEA, the actual percentage was 62% gold, 3% silver, and the balance was copper and molybdenum. So it's got actually quite a nice mix. I like that because, I'm obviously a believer in prices going up, but you've also got the balance. So if the economies recover and you see gold perhaps flatline for a bit, there's probably a decent chance copper and molybdenum prices recover. So you get that nice balance as well.
And your background, just for the folks who don't know?
I come more from a financial background. I spent about 15 years with some of the large investment banks in New York and on Wall Street with Merrill Lynch and Deutsche Bank. And I also was involved with private equity groups running private resource companies. I joined Northern Freegold just over 12 months ago. I saw what I viewed as a fantastic opportunity to get involved with a company that had a pretty sizable gold resource. We've grown it since. In fact, if you look back over the last 3 years, we've grown our resource over 700% on a gold equivalent basis. So we've actually had some great, growth, and I think there's my view is we can continue down that path over the next few years too.
And John, your website is?
It's northernfreegold.com.
Ladies and gentlemen, John Burges, Northern Freegold Resources, symbols NFR on the TSX Venture, NFRGF on the OTC. I'm Shelley Kraft. This is SNNLive. We're at the Cambridge House, California Resource Conference 2013, right here in Indian Wells, California. Thanks, John.
Shelley, it's a pleasure.
I wish you luck.
Thank you.